All right, picture this. You're one of the biggest, most powerful companies on the planet. And then, in the time it takes to brew a pot of coffee, your entire future gets turned completely upside down. Well, that is exactly what happened to UnitedHealth Group. And today, we're going to break down that single, shocking afternoon.
So it really all comes down to this one question, right? How on earth is it possible for a company worth hundreds of billions of dollars to have its whole story rewritten, not over a year, not over a month, but in just a couple of hours? Well, to really feel the shock, you first have to understand the calm before the storm.
Okay, so let's set the scene. The date is January 26th, 2026. The stock market has just closed for the day, and, all eyes are on UnitedHealth. That's ticker symbol UNH, because they've got their big earnings report coming out the very next morning.
And here's what Wall Street was thinking. The big analyst consensus was for earnings of about $2.11 per share. And get this, on revenue of $113 billion, just for the quarter. The stock had closed the day looking pretty strong, too, at over $350 a share. So yeah, these were the numbers everyone was totally focused on.
But it wasn't just about the raw numbers from the last few months. No, the real story everyone was waiting for was about the future. Investors, analysts, they were all desperate to hear from management. What was the plan? What was the recovery path for 2026 going to look like? That guidance, that was supposed to be the main event. And the future that everyone was so laser-focused on, well, it all really hinged on one specific, super high-stakes part of UnitedHealth's business, something called Medicare Advantage. So for anyone who's not deep in the weeds on this stuff, here's the quick rundown. Medicare Advantage plans are basically privatized versions of government Medicare. So, private insurance companies like UnitedHealth get paid by the government to manage healthcare for seniors. It's a huge, huge business, and it's been growing like crazy.
Okay, so this is the number you really need to see. 6.06%. That was UnitedHealth's operating margin over the last year. Now you might think, hey, that sounds okay. But in the world of health insurance, that is razor thin. It leaves you with almost no room for error, no room for any unexpected surprises.
And an analyst report that actually came out the very next morning just hit the nail on the head. They called the stability of these margins the swing factor. In other words, the company's entire financial health for the whole year was riding on their ability to protect these tiny little slivers of profit.
Which, of course, leads to the billion-dollar question. A question that was about to get answered in the most shocking way imaginable. Could they really defend these profits? With margins that thin, was it even possible? Because right when everyone was looking one way, focused on that earnings call, the real story just broke. After the markets were all closed up for the day, a policy bombshell dropped out of Washington, D.C., and it changed everything.
I mean, just look at this timeline. It's wild. At 4 p.m., the market closes. Totally normal day. But then, just 49 minutes later, news starts to leak out about the government's proposed payment rates for these Medicare Advantage plans for the next year. And folks, this right here, this is the heart of the story. Analysts, the experts, they were all forecasting a pretty healthy rate increase from the government, somewhere between 4 and 6%. But what was actually proposed? A rate increase of 0.09%. I mean, come on, that's basically nothing. It was a flat rate. And just to put that into perspective, that tiny little proposed increase was worth only $700 million for the entire industry. Compare that to the more than 5% increase that insurers had gotten for the current year. I mean, it was just a massive, unbelievable disappointment.
So what happened next? Well, the reaction was immediate and absolutely brutal. The news just ripped through after-hours trading like a wildfire. And for anyone who doesn't follow this stuff, that's the trading that happens after the main market closes. It's where you see the first and often the most dramatic reactions to late-breaking news.
And you could just see the carnage right here. This wasn't just a UnitedHealth problem, it was an industry-wide meltdown. Humana, another huge player in this space, it plunged over 13%. CVS Health fell 11%, and UnitedHealth itself dropped almost 9%. This was a systemic shock to the whole system.
Okay, let's just zoom in on UnitedHealth for a second. The stock closes the day at $351.64. Just a few hours later, in that after-hours market, it's trading at $322.09. Billions and billions of dollars in market value just gone, vanished into thin air. So, let's step back.
What's the bigger picture here? What can we take away from this absolutely chaotic afternoon? Because this is more than just a story about one company having a really bad day.
So what does this all mean for us, for anyone watching the markets? Well, first, it's a massive reminder that government policy can, just in an instant, make a company's own performance almost totally irrelevant. Second, it shows the incredible danger of having super thin profit margins. It just leaves you completely exposed. And finally, when the news is this big, it doesn't matter if you're the best company in the business, everyone gets hit.
And that really brings us to our final thought. UnitedHealth was all set to report their earnings the next morning. But after an announcement like this, did any of those numbers, the revenue, the profits, that all-important guidance, did any of it even matter anymore? It's a pretty powerful reminder that sometimes the biggest risks to a company have absolutely nothing to do with the company itself.